right, so hopefully everybody can see that.
Yep, we can see it.
All right, perfect. So I think the first person to speak here is, can you remind me who's supposed to be the first person?
It's me, Kortney. I'm ready.
Kortney. Okay, so Kortney's gonna start and then I'll be next.
All right. So as we know, this was a short market week due to President's Day on Monday. However, there was so much going on this week of both presumed and unforeseen that contributed to the overall market movement. The major indexes ended mostly lower for the holiday shortened trading week, and there was a lot of buzz around big stimulus and inflation concerns. In addition, the longer term yield surged to its highest level in almost a year. The historic winter storm sends a ripple effect across the national economy, including delays in COVID vaccine shipments. Oil and natural gas prices fluctuate due to the shutdown of much of the region's massive oil and gas infrastructures. Cryptocurrency continues to soar with Bitcoin setting a new high. And on the other hand, NVIDIA aims to limit its use of Ethereum. So what this means to you, this means we should continue to do our due diligence, study and learn from the market, and manage our emotions as we determine our investments. So at this point, I'd like to close this section with a quote that was shared on the cookout recently. It says, in short, all good investing comes down to surviving an inevitable chain of short-term setbacks and disappointments in order to enjoy long-term progress and compounding. So at this time, Opal will continue our presentation.
All right, perfect. Thank you so much, Kortney. So we're gonna, at this point, go through just the market recap, the weekly comparison of the indices, economic indicators, bond rates, fair and greed index, and the VIX. Okay, so let's take a look at the four major indices. And as you can see from your screen, in short, all I can say is I dip, you dip, we dip. And the Dow, the NASDAQ, and the S&P 500 took a major bruising this week. If you take a look at the 4-day change, for example, you see. I did that. Okay. If we could go ahead and mute if you're not presenting at this time, that would be greatly appreciated. Thank you guys so much. So if you take a look at the 4-day change, for example, between Tuesday and Friday, you can see that, you know, everything looked pretty negative. As we rode the red wave this week, for the most part, the tech-heavy NASDAQ was reeling this week. Of course, as we all know, the chip dip is real. So for example, right here, we see that the NASDAQ took a negative 1.23% change over the 4 days. Some of the ailing stocks this week that took down our major indices, for example, were Alphabet, Adobe, Facebook, Microsoft, and Netflix in the NASDAQ, for example. And because some of these stocks overlap and they belong to other indices, you know, again, we see that negative dip. So for example, the S&P has Alphabet, Adobe, Amazon, and Visa. Those were, you know, majorly dipping this week as well. And the Dow, we saw Microsoft, Nike, and Salesforce having some negative bruising this week as well. So all in all, a bumpy week in the markets. That is to be expected, as you know, there's some sell-off going on, but also just other indicators. So we're gonna go on over now to economic indicators. So let's take a look at the economy. So we're going a macro scale at this point in time. So the four major reports that we had come out this week. The first one is the quarterly services survey. So in short, the total revenue was over 4 billion, which is an increase of 4.3% from the third quarter of 2020. And some of the services that are included in this survey include the utilities, transportation, information, finance, and health, to name just a few. So if we're talking about a 4.3% increase in those services, then, we can take a look at some stocks or ETFs that are inside of those sectors and services. The second one is new residential construction. So when we take a look at that, we can see that new construction startups in 2021 showed a 6% drop when compared to December of 2020. So again, we want to watch as 2021 rolls on. We can take a look at when we look at companies like DHR Horton and so on, and other builders out there, we want to take into consideration the fact that the start may not have been great, but they could potentially come back. The third one is the manufacturing and trade inventories and sales. Now, this is a little bit more positive. So in December of 2020, business inventories totaled 1494.2 billion, an increase of 0.8% compared to November of 2020. The last one is retail food and services. The sales for January 2021 saw an increase of 5.3%. Yep, I did say 5.3% over December of 2020. So we can definitely see where the money resides. But just bear in mind that holiday spending accounted for some of that increase. I would be remiss if I did not mention that the jobless claims for last week came in at a whopping 861,000, with Illinois and California reporting the highest numbers. We go on to the next slide here. And on this slide, we're going to take a quick look at interest rates. From the top graph, we don't see much change with our information we got last week. The 2-year rates continue to drop. So, I'd say that we just need to continue to keep our eyes on this and how that affects short-term decisions, especially big purchases. The 10-year yield is showing a similar trend. However, the bigger picture here shows that it is slightly rising. Okay. Fear and greed. Let's take a look at the fear and greed. The greed is still pretty high. As you can see, people are still looking for ways. What that means is people are still looking for ways to secure the bag, so to speak, what you and I would call getting our reparations out of the market. We saw some sell-off this week, and there is definitely more to come on that. Even our Auntie Kathy has mentioned that. Apart from the chip shortage, well, I'd say in comparison to the chip shortage, folks are just getting out of contracts as we roll into March, and of course, quadruple witching. We get closer to quadruple witching. Lastly, the VIX. So this is our volatility index, and we saw quite a spike in volatility this week. And if you watch the S&P 500 alongside the VIX, you will, as you recall, with stocks going down and the S&P going down, hence we got a spike in the VIX. For example, the VIX started out at about 19 and change at the beginning of the week, right around here. But if you take a look at it, the high was up to 23.78 this week. So what does that mean? I guess for some people, that was a positive. They went shopping. There were quite a few sales in the market this week. And congratulations to those who went in and, added some new stocks / contracts or ETFs to their portfolios. And for those of us who took some bruising, it's okay. Just hold on, buckle your seatbelt. There is more to come, but everything that goes down or goes up, everything that goes up, come down. So get ready for March and what that means for us. And I think at this point, I turn it over to Lola. Lola?
No, it's actually going to be me, Kortney again.
Okay, Kortney again. I'm sorry.
No problem. So if we go to the next slide, we have our weekly earnings scoreboard. And first up is going to be Planeteer, which is an American software company specializing in big data analytics. It is part of the renowned ARC Innovation Fund. Earnings were released on Tuesday and performed barely over what was targeted. They came in at 7 cents per share versus the 2 cents per share consensus, and their revenue was 322.1 million versus 300.4 million. Although the stock dropped 10% after earnings, it picked back up by the end of the week pretty quickly after Cathie Wood increased shares to 5.2 million. Planeteer is heavy into AI and has global partnerships, deals with IBM, as well as government contracts that exceed $100 million. So in regards to our current reality with the pandemic, we may see Planeteer continue to do well with their software as it provides solutions for health officials that are tracking and trying to contain the spread of deadly viruses. Next up is Twilio, which is a cloud communications platform. It enables developers to build, scale, and operate real-time communications within software applications. It is one of also the season 2 SIPs. Their earnings from this week were a miss, reporting at 34 cents per share versus the 5 cents per share consensus. And then their revenue was I don't know, can you decrease that size a little bit? Can barely see the bottom, but I can continue. Their revenue was at 548.1 million versus the 454.6 million. All right. Also on Friday, Twilio announced pricing of upsize 1.54 billion public offering of a Class A common stock. So it's going to be interesting to see how that affects them going forward. Next up, we have Roku, an American audio and video streaming producer. Roku reported 49 cents per share versus the negative 5 cents per share, beating their earnings. Their revenue was 649.9 million versus 615.8 million. Now, Roku rose 3.8% in midday trading after earnings were reported, and Roku's device makers sales numbers also topped forecasts with 58% surge as consumers are still stuck at home during this pandemic. Next up, we have Walmart, and their earnings report was a pretty much disappointment to many. And although grocers were huge gainers in the pandemic, Walmart still missed their earnings target. They reported $1.39 per share versus the $1.51 consensus. Revenue was reported at 152.08 billion versus 146.42 billion. Their shares fell 6.5% after missing their earnings. And Walmart spending actually was really high that they reported, which attributed to their labor costs and price pressure on wages. They have committed to increasing their wages to $15 an hour. So in addition, they also went through a buyback process. So in my opinion, Walmart is still fundamentally sound. They're just in a transitional stage that will hopefully pay off long-term. So following Walmart, we have John Deere, an agricultural machinery stock that actually jumped 10% after topping expectations for its fiscal first quarter. They reported $3.87 per share versus $2.15, and their revenue was reported at 9.11 billion versus 7.08 billion. Deere's net sales from its equipment unit is actually up 23% year over year, and this will most likely continue as the farming sector becomes more important during these times. So lastly, we have Shopify. Reported fourth quarter earnings on Wednesday, and they missed their target. Reporting at $1.87 per share versus the 2.03 per share. That's a misprint, I'm so sorry about that. And so the revenue actually came in at 977.7 million versus 906.8 million. Although their earnings were missed, the spirit of entrepreneurship and small business is still on the rise. So retail is everywhere now, more than ever, as brick and mortar stores continue to find online solutions for their businesses, and many of them are choosing Shopify. So that's the end of our weekly earnings scoreboard, and I will hand it over to Lola.
Thank you, Kortney. Good evening, everyone. So just in case you missed it, the intent here is to cover notable items that may have crossed our news feeds to provide some insight and context as to also may mean from a global economy perspective. The first one up is our third stimulus check is coming soon. So Janet Yellen, the Treasury Secretary, while she's 100% in favor of the stimulus, these checks will include $1,400 per individual or $2,800 per married couple. It is anticipated that this new stimulus package of $3 trillion is expected to be finalized around early to mid-March. So stay tuned. Next slide, please. Next up, just in case you missed it with Wall Street bets and everything that's been happening over the last couple of weeks on Wall Street. This past week, the House Financial Services Committee began its hearing on the Wall Street bets phenomenon this week. The CEOs of Reddit, Robinhood, Citadel, and Melvin Capital have begun testifying, along with Keith Gill, the retail investor who rose to fame for his gains within the Wall Street Bets group. Additionally, Robinhood users have filed a class action lawsuit against the trading platform for participating in market manipulation by blocking share purchases of GameStop, AMC, and other volatile companies. So continue to stay tuned on that as hearings continue on. Next slide, please. Now to get into a little more deeper, two more items that are kind of a bit more context and what this means from a global perspective. So I know we all have heard at some point in time with regards to the cold snap in Texas. Winter weather has driven up energy prices. So if you didn't know, the freezing weather in regions across the US has driven up energy prices such as oil and natural gas. One of the hardest hit areas on the domestic front is Texas, where their power grid has left millions without electricity, also impacting the state's pipelines and refineries. Well, why does this matter? Well, US crude oil, the production has plunged by a record 40%, which is equivalent to more than 4 million barrels of oil per day. That's a lot, folks. About 80% of the power in Texas comes from natural gas, nuclear energy, and coal, which is where most of the shortfall came from, with the biggest breakdown in supply being in natural gas delivery. Now, the economic fallout from this is not only broad, but potentially long-lasting, as it has created a shock to the world's oil market. What are the global implications here? Well, crude markets in Europe are rallying as traders replace lost US exports. OPEC and allies are deciding how much longer to keep millions of barrels of their supplies off the market, as they're also monitoring the situation in Texas, which has created a surge in the value of crude barrels in other parts of the world. So basically, this has created an opportunity for other countries, such as Europe, who have been in a refining slump where their businesses haven't been booming per se. They're now seeking to capitalize on the demand by rushing to send millions of barrels of diesel across the Atlantic to the US. The weather's definitely having an unbelievable impact on the global supply and demand. Now, who are winners in this? This winter storm has also helped two notable companies in the energy sector this week due to everything that was just discussed, that being ExxonMobil and ConocoPhillips, respectively, who have seen increases in their share prices over the past week. Now, what can we expect? Increased focus and emphasis on renewable energy sources, such as solar, wind, hydro, geothermal, and how we can begin to leverage these alternatives given the new administration's plan for clean energy innovations. We should anticipate present and former SIPs such as TAN and ICLN to begin gaining momentum in the year ahead. One thing I also wanted to note here was we definitely should not be surprised if we start to hear the name of Tesla kind of being socialized with regards to providing a solution to power up Texas, the same way that they helped stabilize the power grid in Australia. So there may be opportunity here, not just for Tesla, but other companies as well. Next slide. All right. Semiconductor shortfall, all dip this week, guys. Where are my chips? Okay, I know I'm asking that question. Now, if you didn't know, the Biden administration this past week, they sought the Taiwanese government's help to resolve a global semiconductor shortage that's stalling U.S. car manufacturing plants. The auto industry is leaning on the White House to pressure foreign chip makers and their governments to allocate supplies to the US. Now, why is this important? Why does this matter? Semiconductors are one of the strategic areas for domestic investment to compete with China and ensure the US is no longer dependent on other countries. Leaders across the globe are realizing just how dependent they've become on Taiwan, which is being courted for its capacity to make leading edge computer chips. This is mostly due to the Taiwan Semiconductor Manufacturing Company, or TSM, which is the world's largest and go-to producer of chips for Apple smartphones, artificial intelligence, and high-performance computing. This has also exposed a supply chain weakness and has disrupted various industries, ranging from automotive to consumer electronics. Global implications. Taiwan's role in the global economy was largely below the radar before the auto industry suffered shortfalls in chips used for everything from parking sensors to reducing emissions. With car makers, including Germany's Volkswagen and Ford, and Japan's Toyota Motor Corp being forced to halt production in idle plants, Taiwan's importance has suddenly become too big to ignore on the global stage. Now, unfortunately, the power failures caused by the cold weather in Texas have closed semiconductor plants clustered around the Austin area. Additionally, Samsung Electronics, the world's second largest semiconductor maker, headquartered in Korea, they've also closed down their production at their Austin location as well. So we have several large chip makers, all based in Texas, who have had to close operations due to the severe weather temps further exacerbating the chip shortage. One thing to note is that the US accounts for 12% of the global semiconductor output, which is our fifth largest export item. Now, winners. Currently, with Taiwan being sought after by other countries to help alleviate this current semiconductor shortage, they're front running the show. Once the chip shortage is resolved, we can expect to see production ramp up in the automotive and consumer electronics industries. This could mean some much anticipated traction on our SIPs such as AMD, NVIDIA, SMH, and Apple, to name a few who have seen some dips without the chips this week. What can we expect? For now, the automotive and consumer electronics industries will remain impacted until they can access more chips. This would also be an opportunity to reevaluate our current supply chain by building up a reserve of chips versus maintaining leaner inventories going forward. Now, congressional lawmakers want to pump billions of dollars into drawing chip manufacturing back to the US while also seeking to fund research and development of more advanced processors through the Chips for America Act, which would provide an income tax credit for semiconductor equipment or manufacturing facility investments through 2026. So we can definitely watch out for another notable company, Palantir, their foundry. They may play a role in evolving the semiconductor supply chain, the same way that they've been helping other manufacturing and other industries as well. Palantir may play a role in helping shape how we evolve our supply chain within the US going forward. That's all I have. I'd like to turn it over to Autumn to give us a recap.
Hi, everyone. My name is Autumn. I hope that you are well. I'll be covering the word on the street. And the word on the street is that the expansion of legalization to online gambling can produce many funds. So just, I guess, for my own edification, do many people know what online gambling is, or have they ever heard of DraftKings Incorporated? Guess I'll look at the chat and see, has anyone ever heard of DraftKings at all? Okay. Well, if you haven't, okay, so someone said yes. So what I'm going to do is kind of talk about the one portion of online gambling. The symbol is DKNG. Right now, the pricing is $60.91 per share. And the importance and how this applies to us and economics is we're going into this digital age, and people are now transitioning from the brick and mortar and looking for other opportunities to actually place bets within these times. The biggest factors right now, of course, COVID, state shut down, everything shut down. People were scared to leave their homes. Also, accessibility. Instead of going into casinos, you can just hop out of your bed, go ahead and either do online bets, or you could actually do live casino. And then the anonymity. A lot of people don't want to be seen in a casino. I don't know why. Like, I live in Nebraska and it's very small, or at least Omaha is. So I don't want to go into a casino if I'm like, I don't want you saying anything like, oh, why are you here? So I like the anonymity of going online and doing like the fantasy football, as well as the other opportunities. Some of the risks with that, again, are COVID. If everything shuts down again, people aren't taking the vaccinations, and also athletics stop, then this could stop the expansion, or at least the productivity of this particular stock and other ones like it. There is some competition. So you have FanDuel, MGM, those are the biggest one in FanDuel. It has a lot of name notoriety, but if you ever played some of those games online, or if you've seen commercials, there's been big pushes to kind of put DraftKings to the forefront. Some of the other more notable things that apply to us and how this pertains to the market, as well as the economic factors. Right now, or at least the end of December of 2020, there were about 12 states that actually approved, and they had an online gambling. Since the expansion, since COVID, now we're in 2021, there's been 15 more states that have said, we want to benefit from the taxes on this. We want to actually follow our constituents and provide this opportunity to go online and actually have a live casino, actually do online betting. Because since 2018, when the Supreme Court said, hey, we actually are, this falls to the states and not us. You have some conservative states like Nebraska, we can't bet here, we have to go across the bridge to Iowa. But you have other states like New Jersey, where 90% of their betting, it's actually done online, a lot of the gambling. Some of the positives is that this is going into that digital age, right? So you're seeing people can't leave their homes for COVID, or even with vaccinations, people are still a little afraid. So the way that we do business, the way that we're seeing the world now, is from the comfort of our own homes. So we're looking at long-term opportunities to actually invest, and long-term opportunities to do business. That's no different than DraftKings and the opportunities there. I do want to let you guys know that the price target is from 65 to 80. And again, there's a little, I don't know if you can see it, there is a little diagram there that looks at the different states that are now looking at approving or approving gambling. One of those is Nebraska, also New York. Governor Cuomo was just like, I want some of this money. A lot of states took hits with COVID, tourism, different athletic events, and they're looking to make their money back through DraftKings and the legalization of other online gambling. May I have the next slide, please? Can you move after that one? I'm sorry, because that one was already covered, so. Thank you. The next one is Bumble. So I had not heard of Bumble before. And the importance of this is the interconnectedness in a digital age. which affects the market. It affects how we're talking with one another. It affects how we are actually getting into relationships. Bumble, they just made their offering on the 11th of February of this year. And the pricing right now per share is $71 and the symbol is BMBL. It is a dating service. And with that service, it's really unique. You have the opportunity to actually, women, they're the initiators first. They can find a partner first, or they can find a best friend, or also do networking. So the factors that have really made this pop or made this very profitable is COVID. People aren't going to bars, or not a lot of them. People are not going out into the world, and they're not having those intentional relationships or conversations as it relates to meeting someone in public. So it goes back to the digital age as well, with people finding the significance of being able to have those to benefit and to profit from everything transitioning online. And the risks of that, also COVID, because once they start opening up more, some of these different apps or some of these different opportunities may not be as popular as they once were. The competition for that, you still have things like Match, Tinder. So with this actual entity, they still have competition from other well-known applications. The positives is it has 40 million monthly users. They have expanded into different locations, and that it's projected to quadruple users in the next 4 years. This is unlike other apps where it is completely women driven. So women have to make the initiative to talk to someone that they're interested in. And it is, again, the person who started this company, she came up with the name of Tinder. She also has that relationship with Match because she's spear marketing to you. Again, it's looking at opportunities or looking at companies that give you, or they can pivot from brick and mortar, and they give you the opportunity to still make money in a digital age, because that's where it looks like we are heading to. Next slide, please. The next one is the commodities, and we're looking at oil. The output, it was a 40% decline. And with that, we all know what's going on with the weather in Texas and different areas. And that caused the plants to freeze, which they can't, there's no productivity there. There's no opportunity to really output anything and to get those, to get the railroads or to get the tankers moving. Crude oil is at a 7 million downfall. And I do want to kind of look at, because the railroads is a part of it, with the tankers and having the opportunity to actually go to these plants, specifically for places like Union Pacific, the tankers and the ability to go on the railroad is going to take a while to actually deliver the oil to the places that it needs. They go through tankers. 99% of the things that we get as a society, it comes from rail. So I don't expect it to be up and running very soon, because down there, the tracks, according to a lot of the MYOs, it's going through severe damage, and those have to be fixed before product commodities can move. And the next slide, please. So the digital analysis, what this all means for us, I did it through a SWOT analysis, which is strength, weaknesses, opportunities, and threats. With moving into a digital age and what we've covered, which the $1.9 trillion stimulus package, we also looked at Bitcoin, we looked at Bumble, and DraftKings is accessibility. People now, which in the market, you don't have to leave your house. So a lot of the brick and mortar places, not like casinos, they won't go out of business, but this is a healthy alternative given our climate. So people can access this, and they have the ability, even through COVID, to still gamble. I saw people gamble on their favorite television show. So people will gamble on anything if you give them the opportunity. It gives people a creative freedom to create different technology applications that will then benefit the masses. the passion economy. People are now taking their gifts, taking what they see a decline in, or if they want to find a solution for a societal problem, they're now building that, and they're addressing needs within our society. The weaknesses, which will also affect the market, is job loss. This is going to a technical society, whether we like it or not all encompassing, but it will happen. And some of the regular jobs that we see, if you look at Walmart stores, they did open one and there are no cashiers. The only thing that's there is like robots, but it's also set up to be self-sufficient. The human connection and also technical skills with the age gap. A lot of people are going to be left behind, which can impact the market because they're not going to know what to do. And it's hard to find a new niche, especially when you look at generations that are older than us. It's hard to teach a dog new tricks. The opportunities, you have a new opportunity to make money. And then the transition of wealth has moved from, people who are older than us, and I say people from Generation Z and millennials. Now we're finding opportunities outside of what our parents use, which, jobs where you actually have to go into a location. Now we're doing all of that in a digital age, and we're making money from our electronic devices, and you're able to get a new skill set. Some of the threats would be the market risk. If you look at places like Sears and JCPenney's, we had a couple here in Omaha. They all stopped because they couldn't pivot because of the market or because of COVID, and it left a lot of people without jobs. And the other threat is limited information. Some people can't navigate, again, due to the age gap and the idea of what a job actually entails. The other portion, and you guys have seen it as well, are listening to people who are controlling the market. Elon Musk, he is pretty much with Bitcoin saying, okay, this is a good buy. Then he turned around and said, this isn't a good buy. So those are also threats to this digital age, and with different currency that can impact people who have invested specifically in Bitcoin, but also cryptocurrency. Next slide, please. Well, I think the most anticipated, but to kind of finish up with the digital age, as we're looking at different ways to invest, Bumble as well as DraftKings, they found a solution to problems where people couldn't gamble. And with different states opening up their regulations and within their state governments to try to make everything accessible, also with dating, looking for companies that we can invest in that have a solution. And if you look at the past, which are great predictors of the future, you look at AT&T. AT&T was just long distance a long time ago, and they moved over to cell phones. And then if you also look at just the adult entertainment industry, and you see a lot of people said that won't work, everything in the classic words of Pimp C, it didn't die, it just went to the web. So we have to make sure that we are pivoting and that we are giving opportunities to make money, because these are actually markets that can help us if we just know what we're looking for. So I would look for, in these cases, things that are going digital, things that actually solve a problem, unlike something that we've seen before. So right now I'm going to hand it over to Miss Lola, and she's going to talk about the most anticipated upcoming earnings.
Thank you, Autumn. So this week, as we press forward, we have 6 notable companies that are reflected here that have earning calls this week. First one, Home Depot, on the 22nd before the open. So looking forward to hearing about that. Teladoc, the 25th before the open. NVIDIA, I know that definitely this is on a lot of our radars. The 24th after close. Squarespace, the 23rd after market close. Best Buy, one of our initial SIPs before the open on the 25th, and Salesforce, last but not least, after close on the 25th. So I'm sure many of us will have our eyes peeled to see what the outcome of these reports will be and how that will impact the activity of those stocks as far as their earning calls go. Next slide. And that is it, fam. now we have opened it up for questions, answers, flowers, all of the above.
And y'all came through with all the facts. I definitely appreciate you guys. I did a lot of work on this.
No, we appreciate you guys.
Thank you.
Thank you. Should I stop sharing?
You
At
can
this?
stop sharing.
Okay.
Um, anyone have questions? I know they covered a lot, but yeah, feel free to chime in with any questions you have. Unmute yourself and just be respectful of one another. No questions, no questions. Well, I got one. How do you guys see the rise in retail, but also the rise in unemployment? Do you feel those numbers contradict themselves?
Yeah, that I thought about that a little bit. I think since some of the holiday spending contributed to that, I mean, I thought about this, that people, especially parents, I mean, they'll do anything for their kids. So, it's possible that people are taking, money from savings. I hope they're not like totally depending on their savings or whatever, but people are probably just spending what they can, especially like in family situations, and taking care of whatever needs they have there. But also, we did get that stimulus early in the year. And so, I'm sure some of that went into the market. And with people also expecting another stimulus, there's probably some spending happening there as well. Now, as far as the unemployment, yeah, that's definitely something to watch. Um, However, I did notice that a lot of the spending was in the retail and food, which I think are just essential. So, I thought that was definitely a place where, regardless of what's going on, people are going to probably always spend money on those two. You got to clothe yourself, you got to eat. So, and then, if people are still on unemployment, they're getting that assistance. I know that some states are cutting back, and of course, they're working on what the bill looks like going forward. Um, but yeah, that's definitely something to watch. But I thought about the fact that the spending went into essentials because that's where that bump came, based on the survey the research that I saw.
Awesome. Thank you for that perspective. Um, I did have another question in regards to the weather. When you were doing your research and looking into the weather and saying how that affected a lot of things, I know you connected it to oil, the energy sector, and then also into the shortages with the chips. Being that pretty much Middle America is the artery that feeds both coasts, and since most of our domestic goods come from Middle America, how do you see that impacting basically, logistics in like the next coming weeks while they're dealing with that?
I think that it's definitely going to take some time to get things back on track. I think, as you mentioned, Middle America being hardest hit, I think that the impacts also kind of are widespread across other surrounding states as well. I can at least speak from personal experience, even in the Maryland, Washington, D.C. area, that we also are feeling the pains of the logistics issues as it pertains to at least groceries are concerned. A lot of the stores up here, they are not at full capacity with regards to their own inventories. So they're still kind of trying to get back to a level of normalcy with everything going on. But I think the broader piece as well is the employment situation, because I think from a logistics perspective, the inability to get some people back to work just due to the current weather conditions, that's going to take some time. I think that we've just been hit with, we've been hit on multiple fronts with a lot of different events. Of course, COVID being the most notable one. Of course, the extreme weather being another, and then that also impacting employment situations where a lot of factories and plants are now closed or at partial operations. So I think that is something in which we have to continue to monitor, but I think we just we can't be what's the word? I guess unaware to the fact that while Middle America is impacted, other states as well are also impacted with what's going on. And I could see it taking more than just a couple of weeks, maybe a couple of months for us to get back to some level of normalcy as far as that is concerned. But as far as the broader issues or challenges that I mentioned, that's of course going to take more time. I don't know if I answered your question, Mike.
No, yeah, you definitely did. I appreciate it. Patrick, you had a question?
Yep, I have a couple of questions. Phenomenal job. First off, I like how y'all tied everything together. So my questions would be, with oil especially, because we see a surge in the price. How do you think overall when oil, when OPEC goes back and then maybe augments production cuts or just push up the supply, how do you think it would affect the overall price and performance of oil? If that makes sense.
It does. Based on the research that I did in prep for tonight, one can expect that I think we've started seeing the price of gas and other natural resources go up. So I think that we can expect that there's going to be some time to recover. Again, I think now we're having to depend on or rely on other countries as far as resources are concerned. I know I mentioned Europe shipping over their own crude barrels. So that does come at a premium, and that cost does have to be distributed out where we as the everyday consumer, we definitely will feel part of that. So I definitely see the cost going up, not just now, but it'll trickle out over time as well.
So a question on top of that now that I'm thinking about it, especially since you mentioned that we're importing, how do you think inflation will switch that narrative? Like, do you think we'll still have to rely on imports, or do you think, because usually in a inflation-heavy environment, you're usually trying to export more just due to the dollar being less valuable. But how do you think that will play out?
That's a good question. I don't know. I'm actively kind of monitoring the situation myself, but I definitely see us still having a reliance on certain resources from other countries. But I'm still personally actively monitoring that also. So we'll have to wait and see.
Yeah, I appreciate that. And then my second question would be, how do you think Joe Biden's push to basically address the chip shortage will help securities like AMD has been suffering for like the last couple of weeks, for months, really?
I am hoping that soon. Well, right now, TSM is kind of that silver bullet for not just AMD, but for a lot of companies. I personally was not privy to the fact that TSM was so far reaching as far as how many companies depend on them. And then the fact that Samsung is the second largest. I think the biggest thing is that on the short term, I expect that at some point we'll be able to resolve the immediate shortage to kind of get operations going. But I do believe from a long-term perspective, we definitely do want to position ourselves where we're not having to repeat the same lesson again, where this CHIPS Act, CHIPS for America Act, I think that's something that is probably going to be heavily pushed so that we do have a fallback plan that in the event that something like this were to happen again, we're not dependent on foreign countries for our supplies, but still acknowledging the fact that they do have quality chips as well. So hopefully we should see action on our SIPs. I would expect over the next couple of months. So seasonality should hopefully be on our side pretty soon.
Yes, it's like a little weird week because companies like ASML and Applied Materials did fairly well. And knowing how they tie into like Taiwan Semiconductors, I was thinking maybe they weren't going to have a great week. But then you also had like the implied volatility from, I want to say, for earnings calls. They showed up pretty good this week.
They did, actually. I noticed that as well. But I think we'll be okay on the short term. I think we do have to find a long-term solution though, so we're not as dependent. So wait and see. Did you have any other questions?
Nope, that's it for me. I appreciate it.
You're welcome.
Hey Patrick, man, the way you asking questions, I might have to tap you in for the next presentation, brother.
Look, I thought I was in a situation.
Yeah, Patrick, next week.
I can't do it next week. It's my birthday weekend, so can't do
Oh,
it next week. But
happy
I'll be
birthday.
Happy
Follow.
birthday.
All right. Anybody else have any other questions that they want to ask? All right. Well, I got one last one. And if nobody wants to ask anything after that, I guess we'll let you guys wrap it up. I had a question regarding the move into the digital age. I found it kind of interesting the way you guys closed it off and highlighted that all forms of interaction were going digital, from dating, employment, and with the change in technology taking over stuff, that labor is actually going to have to go more towards tech focus positions. How do you guys see that impacting how we should be looking to invest?
I would say it plays a big part because human connectedness, human people drive the markets. And so with moving into a digital age and, for example, just DraftKings, we should be looking at different opportunities that have pivoted from, again, like the brick and mortar to something that's viable and something that can withstand a quote unquote pandemic. The big thing with the digital age is you're going to look at automation, you're looking at artificial intelligence. So I would be looking at companies that are heavily invested in those areas. And like with Bumble, the whole dating opportunity, people aren't really going out to bars. I know and I use Nebraska as a reference because that's where I live. People aren't really going out to bars or to a lot of social scenes only because of COVID and people are afraid. So looking for looking for companies that are online based and they're creating different programs or different opportunities that solve a problem or they create a situation to make money, no different than Amazon. Amazon has completely done a great job within the pandemic because people are home ordering stuff. So looking at companies that are digital, looking at e-commerce opportunities would be the best bet.
Dope. Appreciate that. Vanessa, you got anything to add before we close up?
No, I think you ladies did an excellent, very thorough job. I agree with Patrick. I love how you guys tied everything together. You touched on multiple aspects of different things that are impacting us right now and impacting the market. So excellent, phenomenal job, ladies.
All right, we've got a quick question from Yvette before we sign off.
Hi, yeah, quick question. I was just wondering, I know we're watching inflation and we're watching unemployment rates, and I was just reading, and I'm not sure, it's probably something that Lori or Renzo posted an article on just, or something that I found, I don't recall, but something about just the ports, how the ports are just so backed up. And we're looking to, we're finding just so many shortages just based on the fact that there are so many shipments that are sitting in our ports that are unable to be offloaded to get to the stores, just going to the point of just the foods and things in DC. But I was just wondering if anyone had come across anything specifically about that. Just, I know that that's just really, one, how it would be affected as our interest rates, the Treasury, those rates start going up, but also just the fact that we just have so much supply that's just sitting there waiting for distribution. Just any feedback on that.
I had not seen anything. I imagine that is happening though, especially with the weather being the way it is. I'm sure that the weather has stopped, the flow of goods. For example, this week I walked into a Starbucks and I usually purchase the box where, it's a complete box. I think they call them protein boxes. And the server told me that several of the stores don't have them because where they get them from, the plant is closed because of the weather. And so I imagine that as came out in our presentation, so many other sectors or businesses and parts of our lives are affected by the severe weather. So I definitely do think that, it's probably going to be a little bit of a wave, perhaps, in the way we feel the effects of what's going on right now with the weather and the fact that there's so many goods that are sitting at ports. So that is definitely something that we, probably want to pay attention to, and I will take a look and see, what's out there to read on that and see how that affects the flow of goods into our retail stores, um, and food services divisions, places where we go to eat and so on.
And another big thing with that, I work for the railroad, and I kind of mentioned it earlier, but 99% of the goods that come into your home, they were given by rail. So the problem that we're having now is even though we have like trucking, or we call it loop logistics, we can't get to those plants. And with the railroad and some things being tied down or not able to move, you guys are gonna, not you guys, but we're all going to see a loss of supplies until we can get trains moving again. And especially through Texas, like some of the plants that we'll go to, we can't even get inside, so we can't load or unload product. And because of the way that rail is moving now, we have what's called precision railroading. So you have larger trains with more commodity on it. So if I am an engineer, I'm a conductor, I can be traveling with at least 203 cars. With this type of weather, they're having to tie down a lot of the commodity or a lot of the actual containers that are carrying some of those supplies. Like if you saw for a while, at least, again, I'll say Nebraska, for a while you guys didn't see Lysol, you didn't see some of those products. One, because of the plant, there were a lot of things that went on with COVID. They couldn't move because people were getting sick, or the conditions were unsafe. So I would say look towards or look at the railroad, and also it's called loop logistics. That's just an example where they take the commodities from the port and the container goes on the truck. And that's where you see the big trucks carrying products to unload at a particular facility.
Thank you. Thank you for that.
Okay, so I have a question, and I'm not sure if y'all can answer it or not, but this is my question. So with the power grid, like with Texas, and I know like the natural gases in some part was part of the reasons why the power went out with the power grid, but also I think it was like maybe 10%, I'm not for sure of the percentage, of the wind turbines of the renewable energy that was also frozen. Do you think that will affect just like the whole movement of going green and with more wind turbines and solar energies? Do you think that would have an effect on it?
I definitely think so. I think this is a situation where the energy industry is really kind of maybe putting fire under them to make sure that we get those alternative options, so that if something like this were to happen, there would be just another option. Because right now, it's just a terrible situation that's kind of trickling down into different sectors because we don't have any other options. So I definitely would say so. Hopefully sooner than later.
I would like to add to that. When you look at natural events like this that aren't common, they tend to highlight where some companies have been pushing the buck, like Superstorm Sandy. Con Edison in New York, which is like the major energy provider, said that they were investing a lot into their infrastructure, redoing their cabling, making sure that their power plants were handled so that if they do have any inclement weathers, high water, sea water go into their stuff, they would be okay. But Sandy happened. That wasn't the case. The whole tri-state was down. They didn't have power just because of, you know, um, 12 feet of salt water went into one of their stations, which they said they did. So this is a good way for you guys to look into the companies that you're investing. So even if you are looking to invest in infrastructure and energy companies, check to see. If they're saying they're doing investment in themselves, they're doing R&D to improve their infrastructure. This is where you look deeper into their 10K where they said they're putting the money to make sure that they're having it. Because I know for a fact a lot of the companies that are producing power and handling power management in Texas, they failed that test major.
That's an
We
important,
got
that's an
go ahead.
important, because I work in regulatory in my state, New York, and we're out issuing violations to a lot of these utility companies because they have their workers out and they're not doing the jobs that they need to do to restore the power to the customers. And then a lot of the work that they're doing is sloppy work because they know that they're getting money from the government, but the government is not um, following up on the work that needs to be done until something happens where the customers get hurt. Or this week alone, I was on call and we received about 30 jobs of carbon monoxide poisonings, fires, and manhole explosions only because of salt and melting snow that corroded wires. So yeah, it's a problem. You have to not only look at the productivity in terms of earnings, but also look to see if there are violations that are outstanding for these facilities. So that cuts into their bottom line as well.
Appreciate that, Lori. You also had a question in the chat. Why don't you just go ahead and ask that one now?
I believe I asked, hold on, let me go back to it. What if the president were to declare more states had to be covered under the state of emergency? And how does this affect our stimulus? So let's say like if he had to push back the stimulus because they had to find extra money to give to the states to restore and remediate from damages from the storm or COVID.
I think it may just increase those inflation concerns. If more people need the extra stimulus for this emergency, I really think that it may increase those inflation concerns. And in the long term, it would be something that we would just have to deal with later. Although I did read an economist say that should inflation actually occur, we may only see about a 2% increase later on down the line. So I want to see if I can pull that report up, but I do feel like it would just increase those inflation concerns. And that would be my take on that. Anybody else want to add to it?
All right. Well, it looks like you guys killed it today. I definitely appreciate you. If we put some fires in the chats for them, show them that love, give them their flowers. They went above and beyond. You know, uh, we had to adjust and pivot at the last minute because we had to celebrate. So uh, like Mark and Jolene said yesterday, thank yourself. Thank me. I want to see that in the chat. You can put thank me in the chat because all you guys made that 50K possible and also made this get together tonight possible. All right, so with that, I guess we'll close it out. Vanessa, you want to do the closing? All right, I guess I'll do the closing. So one of you ladies want to do it? All right, well, I guess not. So
I was just gonna say thanks everyone for coming. I'm so you know, and pivoting, so to speak, from last night. Whoop whoop 50K, and you know, great job everybody. But thank you for coming and supporting us tonight. You know, early evening, 6 p.m. You could be doing dinner or something, but you're here with us, so we appreciate it. And I thanks to my team working together as well, and cousin Mike and cousin Renzo for all their support, and Vanessa for getting us started. So looking forward to the next one. Everybody have a great week. Strap on, get ready for more S&P and index action this week.
Thanks, everybody. Everybody have a good night, and we will see you guys in about an hour or so at Sector Sundays. Take care.
later.